Good morning, guys. It's April 5th, 2026. I'm headed into work and wanted to do a trading video with you. Before I get to that, today's a very special day. It is Easter morning. Hopefully you've got a relationship with Jesus as I do, and Easter morning is a special holiday. So happy Easter, everybody. Happy Easter. The tomb is empty. All right, switching gears, let's chat about trading for a little bit. I was gonna do a video, and the title was gonna be 5 years of trading wisdom in 5 minutes. There's a lot of videos out there like that. It's kind of a catchy title, and you're like, awesome, I get 5 years worth of wisdom in 5 minutes. And I started trying to make that video, and I am right now, after 5 years, a break-even trader. And as I'm making the video, I'm like, who in the heck wants to hear advice from a break-even trader? Like, you're not even consistently profitable. Why would you want to do that? And as a Christian, one of the most powerful things you can listen to is somebody else's testimony, somebody else's struggle, somebody else is in the thick of it, somebody else is in the valley, and they're talking about, they're not even saying like, this is how I beat it. They're just saying, I'm in the battle. It's a testimony. And sometimes, yes, there is a victory at the end of those testimonies, and sometimes those people aren't at the finish line yet, and they're still extremely powerful. And that's what I'm hoping to do here this morning. So I'm shifting gears from 5 years of trading wisdom in 5 minutes to the testimony of a break-even trader. So that's what you get here, the testimony of a break-even trader. A couple of points, and I've only got a few minutes before I get to work, so this won't be long. Number one, the strategy is what we as traders, newbie traders, the strategy is what we focus on, and we spend years, this is what I did, years looking for the Holy Grail strategy. The strategy with the perfect win rate, hell, even a good win rate that is going to make us profitable. That's what we do. That is wrong. Now, I'm not saying having a good strategy is wrong. What I'm saying is prioritizing the strategy, putting it in the preeminent position, is wrong. You have to have these other pieces of the puzzle, the other legs of the stool in place in order to allow the strategy to work. The strategy is just an edge. You just need a little market edge, and it doesn't have to be much. It doesn't have to be much. A 50% win rate, as dumb as that sounds, is more than enough. And that's not even really a strategy that you can pretty much just pick randomly, up or down, and get in. So, if that sounds crazy or stupid or wrong, my guess is you're asking, well, what else is there that is so much more important than having a strategy? And a couple of those things are, you have to have good risk management. That means you can't risk too much each trade. You'll blow your account up. So you have to have good risk management. By that, in particular, specifically, I mean only risk 1 or 2% of your entire account balance on each trade. That very small amount is sufficient to, one, keep your mental state stable. It's sufficient to keep your account balance stable. So, one of the other very important variables is your risk management. Secondly, and very closely related, when you take a trade, You have to win more on your winners than you lose on your losers. Okay, if it's flip-flop and a lot of newbies do it wrong, the math doesn't work. When you place a trade, you've got to win more. So let's say I'm trying to win $2 on every trade, and I'm going to risk $1 on every trade, the risk to reward ratio. So number one, your risk management. And what I mean by that is risking 1 or 2% of your account balance per trade. And two, the second variable is your risk to reward ratio. It's got to be positive. Preferably like a 2 to 1 as a minimum, if not more. Third variable, your psychology is absolutely paramount. You have to not revenge trade. You have to not go on tilt. You have to not FOMO in. You have to not let greed overtake you. Even if you have a good strategy, if your psychology is messed up, your psychology is weak, you will get sucked in emotionally and you will make bad decisions and you will blow up accounts. So we got a couple of variables here. We got 4 legs of the stool. Number 1, strategy. Number 2, risk management. Number 3, your risk to reward ratio. And number 4, your psychology. All right, put this together real quick. I'm at 6 minutes. Let's see if I can wrap this up here. You have to build a system, build a stool, a trading system, and the analogy is the stool, that has all 4 of these in place at the same time. They have to all be there at the same time. If you're missing one of these, you'll blow up your account. So what we need to do is pick a strategy that allows us to get in somewhere, get in the market at a relatively defined spot. So it might be a support and resistance line. It might be a supply and demand zone. It might be a pullback to the 50% Fibonacci level. It doesn't matter. All of the strategies work in that they're all sufficient. If you can define them and slap a couple of rules on them, they all are sufficient to allow you to get into a trade at a particular spot. That's all we're looking to do. Strategy, pick one that's relatively simple, maybe a couple of rules, a couple of confirmations, a couple of confluences that allow you to get in a repetitive way each day at a specific spot. Okay, that's one leg. It's the easy one, the strategy. The second leg, you need to, and this is easy too, don't risk too much. Risk a small portion of your account balance. 1%, 2%. Risk a small amount of your account balance. This is and let me make a very short side note here. If you don't have a lot of money, let's say $100 or $1,000, and you're only risking 1%, you can't make any money doing this. You have to have a lot of capital, like $100,000 in capital, in order for this leg to work. So how do you get $100,000 in capital if you're poor? And the answer to that is prop firms. I'm not going to do a video. This video is not about prop firms, but get $100,000 in prop firm capital, and you can do videos on figuring out how to do that. All right, so that was the second leg of the stool, the amount you're going to risk per trade. The third leg of this stool is your risk to reward ratio. When you place that trade, you need to be risking 1%, which we just talked about. But your reward that you're shooting for needs to be more than that. You have to have a positive risk to reward ratio, preferably 1 to 2 or better. So that, again, that's not complicated. When you set the trade up, you use your risk to reward tool and make sure it's at least a 2-to-1. Again, not complicated, but you got to have that positive risk to reward ratio. That's going to put these statistics in your favor. And the last one, so we had strategy, risk, a risk to reward ratio. And this last stool is the mental piece of it, the psychological piece of it. You have to become a person that doesn't emotionally go crazy watching your P&L go up and down and screwing everything up. This is the hardest and most important piece of it. The psychological leg is the most important leg of this stool. People fail at trading. People can't do trading because it requires them to become somebody they're not. Most of us are not. All right. Last point of this analogy. When you have a four-legged stool, the four legs go down, they're vertical, and there are cross beams that you can usually rest your feet on. That for this stool analogy, those cross beams that you rest your feet on and hold the legs in place, those are, for this analogy, the word discipline. Your discipline is going to keep these four legs in place vertically under the stool so they don't flop out and break out and you fall on your butt. So the discipline is required in order to allow this stool to do its thing. If you allow the stool, if you build this four-legged stool and you allow the numbers, the probability, the statistics to unfold and play out in your favor, you will be profitable. Okay, a 50% win rate with a 2-to-1 risk to reward ratio, assuming you're only risking 1% of your account balance and you don't screw up your psychology. If you can do that, you will be profitable, period. So why do so few people become profitable? Because they do it all wrong. They have no discipline, they have no psychology, they have no risk management, their risk to rewards are all screwed up, and all they do is focus on a holy grail strategy. It doesn't work. It's wrong. So, in summary, in summation, my testimony as a break-even trader, after 5 years, I have finally figured out, oh shit, it's not about the strategy. It's about building a proper stool built on proper legs and tied together with proper discipline. And I'm excited about 2026 because now that I know this, I can work hard and diligently on becoming that disciplined person. And when I master my self-discipline, the stools are going to do, the legs of this stool are going to make me become profitable. We become profitable when statistically we let the numbers and the math do its work. So good luck out there, traders, in 2026. Build yourself a stool and begin working on the discipline in order to become that disciplined trader. Hope this was helpful. Bye.